Well, so much movement overnight when it comes to currency markets. So let's bring in Clifford Bennett from ACY Securities. He joins us now to tell us more about how the inflation data moved those Forex markets. Clifford, always great to have you on the trade. Look, set the scene for us when it comes to this inflation data. You're a trader, you're watching it live. How do you set yourself up and what was the result?
Good afternoon, Cara. Nice to be on the show. I've just been juggling. I mean, I could do it for you, but perhaps I might hit the camera or something, trying to figure out which currency to sell. And the winner is the Australian dollar. So it was the first to fall and it fell with a thud. Basically, we've been outlining for some time, and it's been great to be on your show so frequently, how the Australian dollar was vulnerable fundamentally from the, let's call it, alienation may be too strong a word, but certainly we've kind of not made a renewed friendship with China of late, and they are our biggest export partner. Hence, in Australia's trade figures last week, we saw really trade collapsing both imports and exports, and that's a pretty common phenomenon around the world. But what was particularly worrying was we saw that our agricultural exports to China fell from second place in terms of China's imports to fourth. So that's a big drop, 2 places rather quickly. And we saw our nickels, ores and minerals down very big numbers indeed. Of course, some of this is going to be pricing. Commodity prices have certainly peaked. And some of this is going to be when they can shop elsewhere, the Chinese are certainly going to be shopping elsewhere. That's a key vulnerability to the Australian dollar. Also, the other aspect we've been talking about for some time is how the domestic economy is not going to have a sharp rebound. Now, we've talked also about the high inflation. I think we were the first to be forecasting inflation was permanent and it would go higher. Remember, not so long ago, everyone was talking about how US inflation was peaking around 5.4%. We said it's going to be going a lot higher, and it's shot up above 6% in the last 24 hours on the official data there. Also, we had very high inflationary data in China yesterday. So the world's 2 largest economies have runaway inflation. Producer prices in China were strong. This is a global phenomenon. It's here to stay, and it's catastrophic for equity markets, which means there's going to be some safe haven buying of the US dollar. And if you look at a euro-US dollar chart, for instance, you're going to notice that it is ready for another fall. And that is, in other speak, the US dollar is ready to strengthen again. And I think that will be a global safe haven thing. You can argue till the cows come home whether the US dollar is still a safe haven vehicle, but it is perceived that way. And certainly US corporations will be even more heightened in wanting to bring their funds home. So we're looking at euro weakening there. US, that's why I was juggling which one to sell. But the US dollar is going to be strong across the board. That paints a very bad picture indeed for the Australian dollar, because you're going to have a strong US dollar on top of those bearish fundamental points I just made for the Australian economy. No real economic rebound to speak of. It's not going to be another boom in the domestic economy, and the export market is really in trouble with trade collapsing. Look at that chart. That is a market in serious trouble. I think this is going to be a free-for-all market. I think we're going to see a really sharp downturn in equity markets, boosting the US dollar through the roof, and we're going to see a sharp falling Australian dollar. So what is that? Where is there anything left to buy? But we'll just look at a long-term chart of the Australian dollar, if we can. And if you look at the 25-year chart of the Australian dollar, my call, which I made last week, of a forecast for 2022 of the Australian dollar falling to 65 cents, when you look at a long-term chart, that's not such a big call. And Cara, you always look after me, so I thought I would do it first on your show. I think the risk could be as great as 58 cents. So a lot of downside potentiality there. And we just saw the daily chart where it looked like it was falling sharply. Look, when you look at the long-term chart there, it's just beginning to fall in the midst of a consolidation pattern. It drops out of the bottom of that consolidation pattern below 70 cents. That's a bit of an air pocket there towards 65 cents. Is there anything to buy? Magic, magic, magic. Is there anything to buy? Yes, gold. Gold is definitely a buy. We've been saying steady accumulation of gold all year long. We said the volatility would remain high, but it was a consolidation pattern of a massive historical sort of size, of quantum. And when this market breaks higher, it's probably going to 2,500 US dollars relatively quickly.
Well, let's drill back. I'd like to drill back down into the Australian dollar because you've given such a big call for us, that 58-cent handle. If you're a trader and you do believe that it's going lower, how do you set yourself up for this trade? Do you build on positioning? Are there any specific entry levels that you'd be looking for, any data sets that you'd be wanting to trade around?
Yes, definitely, Cara. Well said. I think you go for your morning walk. I think you get a double or triple coffee. You sit down at your desk and you just keep your finger on the sell button for as long as you can. Stay awake as long as you can with your finger on the sell button. I really do think it's going to be a downward trend. I guess if you wanted to be a little bit more conservative than that, you would probably be selling at the open here in Australia today if you're not already short. You would have a very wide stop loss, and you might want to start with a small position because there could be some volatility. Oh, and there's always the unlikely prospect that I could be wrong. So have a stop loss relatively wide, though, for the volatility that may be seen. But the sooner you can be positioned short, the sooner you're going to be like, a submarine sails smoothly around the oceans because it's below the surf, the waves, the swell. So it just sits there. So what we're trying to do now is the reverse of that. And we're trying to get positioned above where future volatility will be so you can stay with a sustained long-term trend, assuming I am correct. All right. But I think the fundamentals are stacked up. I think the price action, the economic data we're seeing is in line with all of ACY's forecasts. We've had an incredible year on forecasting the economy, and it's going to flow through now. Equities, fear, safe haven, US dollar, Australia's a bit isolated down there, and all this supply chain disruption, not a good outlook. So, yeah, I think positioning for a significant downside in the Australian dollar is a good call.
Clifford, just quickly before you go, why is the trade against the US dollar and not one of the cross rates at this point for you?
Okay, I think that will come later. I think it's going to be a broad situation of buy the US dollar. I think there's going to be safe haven flow from the rest of the world to a certain degree, but maybe less than what has already been occurring. But the real safe haven flow is going to be from US corporations bringing funds in a panic home. So that will affect all currencies relatively equally, and I think it will affect the Australian dollar even more. If you wanted to sell Australian dollar on the cross, just to be very cautious, you might sell the Australian dollar against sterling, because so much bad news has been priced in against sterling that even though it might have sharp falls to the downside, it's probably not going to sustain the medium-term trend weakness that the Australian dollar will against a strengthening US dollar. So you might want to sell Aussie, buy sterling as a more conservative approach. But I do think at the moment, if you're in Europe, you should be selling the euro. If you're in the UK, you should be selling sterling, etc. Though I think a lot of traders in those markets have already identified the Australian dollar as a trading hedging opportunity and tool. Basically, selling the Australian dollar could become the global hedge, if you like, of inflation eating away at future economic growth for the globe.
All right, 58 cents it is. I'm going to hold you to it. We'll check in with you again on the trade as it heads towards that mark, hopefully. Clifford, always great to chat with you. Thanks so much for joining us.